you miss some points, you can always come back and check the video. So what I was trying to tell you is this is a pair trading strategy which you would have already heard about from many places, or you would have seen it also. But what we have done is this requires huge amount of calculations, backtesting data, and a lot of other technical stuff. So usually people will not be aware of all these technical aspects. So they end up not using this particular strategy. But what we have done here is we have tried to automate it, and we are giving you a finished product wherein it will generate calls for you, and you'll have to just place the trades on your own. That is what you'll be doing. We have simplified in such a way that even a kid can go and place an order at that particular price. What you need is a trading account with good margins. So that is what is needed here. And before starting, I'll just tell you what is the pricing for this. I know that I'm doing this a bit early, but you'll get to know the significance of this we complete this particular webinar. So it will cost you around 19,900 for 1 year. That is including the mobile app and the data charges. And for 3 years, it will be 29,900, and that will include even your mobile app and data charges. And there are other segments that can be added also. That is, you can trade in options, you can get even commodities also into that. So that is the scope of this particular application, and it runs on. You just need to have an internet connection and a system, and once you subscribe, you'll have access to all the pairs or all the trades that happen here on paid trading. So this is how the interface looks like. So before getting into the interface, I would like to actually start with a small theoretical presentation of how this whole application works. So now I will give you, I'll give you the basic theoretical idea in few minutes, and then after that, in case if you have any doubts, you can type it in the chat box, and then we can discuss about various issues. Like, what is this pair trading? Pair trading is nothing but trading neutral to the market direction. Maybe you would have just seen that Nifty movement in this past 1 month. I'll just show you that. So this is how Nifty has been moving around from the past 1 month. Let's say 30 days of data is what I'm taking. It was somewhere around 8,500. It fell to around 8,000, and then again it has moved somewhere near to 8,500. And how do you trade in this kind of a market? That is a gap up of 50 points, 60 points, a gap down. How do you trade in this market? So we come out of this particular trading on the market indicators, that is either the Nifty or Bank Nifty, and we try to do pair trading. Pair trading is nothing but a very simple technique or a strategy. Let's start it here. Here you will not be trading according to the market direction. Let Nifty go on another 1,000 points down or 1,000 points up. It doesn't matter to us because we are not trading on Nifty, or we are not trading as per the market direction. We trade on certain correlated scripts. Correlated scripts, I'll tell you what is correlation also. So when you trade in this particular strategy, the profits will be irrespective of your market direction. So since you are not trading as per the market direction, you'll make profits irrespective of the market direction. That is nothing, we call it as also neutral trading. So this is a theoretical explanation of a pair trading strategy. A market neutral strategy that where we have two scripts. We go long on one script and we short other script, and then we try to make profit out of that particular trade. Now, what is correlation? We'll come. I can share this particular presentation with you. You'll have to just give me your mail IDs. You can just go through this theoretical stuff. So you can even do currencies. You can do even commodities. You'll be able to do options. There are various ways how you can do this. Now, how does this particular technology help? See, technology is one thing which has been very useful for the stock market in the recent times, because the huge amount of data what we have has to be digitized and has to be analyzed. So that is where the technology comes into focus. So the now a person who has this data can analyze and he can interpret the data and then he can take trades out of it. So we have something like we have some audio problem. So usually this particular strategy is used by hedge funds, institutional investors, fund managers. Uh, okay, this is a market neutral investing, not a single strategy. We have other strategies also: arbitrage, equity hedging, equity market neutral, fixed income arbitrage. Many people are asking about this also. But this and all, these are the other ways of doing neutral trading, neutral market trading. And how do you do it? I will show you this. This is again a theoretical explanation. I will show it to you in real time. So in case, let's say, okay, now let's come to correlation. Correlation is nothing but, let's say, two particular scripts, script A and script B, let's say Tata Steel and Jindal Steel. Now, these two scripts are correlated. Correlated in the sense, what I mean is, these two particular companies are into the same kind of a business, that is, their steel. That is what they manufacture. So these are two highly correlated companies. So what happens once these particular two symbols are added into this particular application, there are times when this two, since they are in the same business, they should be moving in a same position, either up or either down. Now, at certain point of time, what happens is, let's say Tata Steel has given you good results and it moves away from Jindal Steel because Jindal Steel has not given you that kind of a results for that particular period of time. Now, in that case, what happens is your correlation comes into the picture. Jindal Tata Steel will move up and Jindal Steel will be coming down. And once you hedge these two pairs, then you will be able to make profits in a certain duration of time. I will show you that. Now, correlation is very important. Now, we have an example. Let's say we have a main road and a river. And usually the river follows the main road adjacent to that. And due to some geological factors, let's say terrain or development or something happening, actually both move away from their directions. So that is where they diverge. And again, after a period of time, the river and the road again come back and then meet. That is the convergence. They again meet. Or else you would have seen this very simple example: a train, a railway train, and then bus. You usually see that the railway track will be adjacent to the bus route because both are in the business of transportation. And at some point of time, let's say there is a development, a flyover or a small town coming up, both diverge. And again, they come back and meet somewhere in the city. Your railway station and your bus stand will be close by. So this is another example of how correlation works because they are the same business. So the first step in finding a suitable pair is they should be under the common business. Let's say there should be in either in banking or finance or IT, or you have various sectors. We'll again come back to that. And correlation is one thing which is very important. Like let's say we can't put Tata Steel with some other pair, an IT company, because IT company is into a different business, and Tata Steel, what Tata Steel does is manufacturing of steel, and coefficient of correlation and all this stuff, you can just ignore this because we already have done that as a white box. So what triggers the weakness in correlation? That is your company's financial health. I told you one company might perform better and the other might not be doing that. Restructuring or mergers, you have positive, information about products, change in key management. These are some things which can trigger a company's profits and its performance. So these are the fundamental factors. This we regularly see every quarterly basis. You can even use candlestick patterns, but you don't have to do it here. Now, what are the risks involved? There are some risks involved in this particular strategy. The first risk is the execution risk, because see, once you get a trade, you should be there to place the trade, and there might be slippages also. Let's say in case if I am buying Ashok Leyland at 50 rupees, I have got a signal at 1550, sorry 5015, and by the time I place the order, it actually moves away. Then that percentage, a 10 paise loss or 20 paise loss, is due to the slippage. And here the other disadvantage here is you are trading in two pairs, two scripts at a single time. So your investment that is needed will be double. That is, the margin required will be double. So that is one thing. And the same with the brokerage also. You will have to end up paying brokerage on both the scripts. So that is one. And execution risk. And execution risk, I'll tell you, that is, let's say you got a call at 3 o'clock in the evening, and you're not able to place the trade at 3 o'clock. And the next day there is a gap up or a gap down market, and this particular two scripts you'll not be able to get at the same price. That is another risk, execution risk. But what are the advantages what you have? You have a controlled risk. You can control risk in the sense, I will show you that on real-time basis. Here, you know which particular script, which particular pair you'll have to enter. What is its correlation? What is its winning percentage? What is the maximum duration that we can stay on that particular trade? All this information is available with us. So we will be able to, we can always decide our trades, and we can enter into only trades which we feel are successful. So that is one of the biggest advantage. And the other advantage is you know what is your risk, what is the amount that you can lose on a particular script. So that is another advantage. Now, the strategy itself is a market neutral strategy. So irrespective of the market direction where Nifty moves, we don't have to worry, because we are into a hedging strategy where in case if you are making a loss in one script, the other will hedge you and give you profits. That is how this particular strategy works. So directional risk, I told you, it doesn't matter where Nifty is moving. Smaller drawdowns. Now let's say this I will show you in practical again. Drawdowns in the sense, like let's say a particular trade has initiated, and the next day we have around 10% profit, and the second day it actually comes down, the profit reduces to around 5,000 rupees. That 5,000 rupees is the drawdown, what we call as. I will show it to you in real time. So this is a market neutral strategy. So it's best suitable, anyone can trade, because what you need is just an internet connection, either on the laptop or a system, or on your mobile also you'll be able to do this particular trades. You don't have to spend full time on this live market from 9:15 to 3:30. You will have to just refresh it every 1 hour and check whether there is a call or not, or else at the end of the day, that is before 3:30, 3 to 3:30, you can just refresh your account, and then you will be able to see the calls generated, and then you can place the trades before 3:30. That is how it works. So you don't have to be in the market full time. So advantages is you can trade like a fund manager. You will have live entry and exit signals. It's a mobile application also. You don't need any technical indicators of things like that. And 10 years of backtested data is there for all the pairs. So you will get that backtested history. And the other thing is you don't have to have any technical knowledge to trade in this particular strategy. So that is a brief description of how that whole strategy is. Let's come to the real application. So this is how the application looks like. What you'll have to do is you'll have to first subscribe. Once you subscribe for this application, you'll be given an access to our servers where actually the calculations happen at the back end. So what you will be actually seeing in your screen is nothing but the live entry and exit prices of pairs where the trading is happening. Now we have something called as add group, watch list, settings, my trades, logout. So these are the 5 buttons that we have. We have tried to made it. We already made it very simple. So here correlation in the sense, let's say we will have to add scripts which are in the banking into the banking pack, and we cannot uh, mix the banking with IT or auto. So we have segregated certain groups wherein we have put the symbols. Now let's say banking. Banking we have two, banking one and banking two. So banking one, what we have is our public sector banks. Banking two, again we have our private sector banks, and again we have mixed both public sector and private sector banks so that we get the trades out of it. So these are the banks that we have added. What you'll have to do is you'll have to click on and then select all and click on backtest. I've already done that. I will show you when it will take some time for the backtesting to happen. So I will take this particular auto ancillary. So I have auto. We have again segregated. Let me just show you the groups. We have banking. We have IT, auto. Auto again, pure automobiles is one thing. Auto ancillary is different, and auto finance is different. So we have segregated it into 3. Cement. We can again put auto finance into auto, auto ancillary into auto. Again, we can backtest all those also because they are all correlated again. But for highly correlated scripts, we have just segregated to auto, auto ancillary, and auto finance. Now we have cement, we have electrical and engineering, we have entertainment, we have pharma, power, metals, FMCG. So these are the scripts that we have in FMCG: Bata, Colgate, Palmolive, Dabur, HUL, ITC, Jubilant Food, McLeod, UBL, Godrej, Asian Paint, and Titan. So the scripts what we have is the scripts which are present in the F&O segment only. So we have other things like metals, okay, oil, infra, real estate, finance, housing finance. Now let me just show you housing finance. We have 3: HDFC, LIC, India Bulls Finance. I'll show you how the backtesting is done. We select all 3 and click on the backtest. I'm just doing this because we have only 3 here. But otherwise, usually when we have 10 or 20 scripts, it will take huge amount of time to get the correlation. Now let's see here. We have India Bulls and Housing HDFC. This we have 3 trades. You can see that is 100% winning trades. That is, it means that there is not even a single trade where you have lost money here. And we have LIC and HDFC. We had 15 trades in the past 10 years. 80% is the winning trades. So hardly 1 or 2 trades you would have lost. The highest winning trade and the highest losing trade. This highest winning trade and losing trade, I will come back to that. The highest losing and winning trade will not be the exact amount. It might have been for a reason of stock split or dividend issue. And the next note, what you'll have to see is highest number of losing trades will be lesser than what they have displayed. As the pair would have made profits earlier, that is, we are looking at 20% profit on each trade, and it would have closed in loss when the z-score reaches 1. I'll come back to this. So this is how you do the back testing. Click and then select all and then add it to your watch list. So that will take time. So once it is added to the watch list, so there you go. It is added to this watch list. We have this many number of pairs where we have added roughly around 500 odd pairs. Now let me just come back to the main list. So these are the groups that we have. In IT, we have TCS, Infi, Wipro, HCL Tech, Tech Mahindra, Exaware, Mindtree, OFSS. So you don't have to do all this, adding of scripts and this stuff. It will come predetermined. All this will be included. You'll have to just start checking the watch list and then you'll have to place the orders. So in case if you have understood, I would like to ask a question. In case if you have understood the groups, can we just go ahead and then continue? Or if you have any doubts, you please ask me now. You can type it in the chat box. So can I take this as an answer that you have understood what is groups? So I'll just go to the next subject. So once you add all the groups, you have something called as a watch list where you'll be getting all the pairs. The pairs what and all you have added. So I have clicked on watch list. It will take a few seconds for you to get the data. And the delay will happen because you have around 500 pairs, and you just imagine for 500 pairs in the sense 1000 scripts into 10 years of backtested data, so that will definitely take time. So these are this is the watch list what we have. There we have the pairs, that is HDFC symbol 1 and symbol 2, the symbol 1 price and symbol 2 price. So we will have something like this, green and red. The green in the sense you'll have to buy this script and you'll have to short this particular script. Now we have certain technical parameters here. So coming to the number of pairs that we have. So these are the number of pairs that we have. So roughly around 500 pairs. 500 pairs in the sense we have around, let's say, 240 trading days. That will be more than 2 trades on an average per day. So the only criteria here should be you should have money in your account to trade. So I'll tell you what it will cost to trade in this particular strategy. So we have roughly around 500 pairs, and there are another 6 or 7 scripts that are being added into the future segment from the next contract. So that will again we'll segregate them into different groups, and then we will do the back testing for that. So this could be a continuous process where we'll be adding the scripts. Now come certain conditions. We have the symbol 1 and symbol 2. Symbol 1 we have the price, that is These prices what you are seeing here are the cash market prices. So your cash market is the base market, that is the real market. So your futures or options or any other instrument other than the cash is always a speculative market, which will always depend on the cash market prices. So once the cash market prices moves, then only your futures or option prices also move. So you'll have the prices in the cash market, but you'll be trading in futures because you'll not be able to afford to buy or sell to one particular pair, because you will not be having that kind of money in your account to do carry over trades and cash market. So your broker might give you maximum 3 or 4 times, but whereas when you come to futures, it will be much more than that. Now the futures, this is what we charge for the futures carryover. So this will be around 7.5% of the total margin requirement. So we will be charging only the span margin. So in case if let's say you want to trade an ACC on a carryover basis, you need just only 14,200 rupees in your account. So we'll come back to this again. Now these are certain conditions that we have for you to trade. You can just go through this. So these are some technical parameters what we have for you to pick a successful trade. Now we have something called as the Z-score. Z-score is nothing but the plus and minus what you are seeing here. That is 0.46, 0.96, 0.65, 0.87. This is called as the Z-score. So whenever a trade is triggered, your Z-score will be 2.7 and above. This can be plus or minus. This can be plus or minus 2.7. See, whenever this 2.7 happens, the trade will automatically get triggered. Now, next what we have is the trade status. Trade status is nothing but watching. Watching is the upcoming trades, and there are certain trades like what you're seeing in green and red. Trading now. Trading now, in the sense, this is the current running trade. I will show you this. We have something called as a correlation. The correlation is nothing but, I've already told you, between two particular scripts in a group, that is their kind of business what they have, that should always be more than 70%. Here you can see correlation between HDFC Bank and SBI is 4.5%, whereas ICICI and SBI is 86%. And Andhra Bank and SBI is 88%. You can see Can Bank and SBI is 87%. The more the correlation, that is more than 70%, the trades will be more successful and the profits will also be more. Now the percentage of winning trades is also important. I will show you that. So always pick when the Z-score is 2.7, that you will get automatically. The call will get triggered once it is more than 2.7 plus or minus. Correlation is something which you will have to interpret. Interpret nothing. You will have to just see that correlation and then you will have to place the order. Winning trade is something which you will have to always keep in mind. Now we'll come to RSI, Relative Strength Index, and volatility. And the exit score. Exit score, that is the Z score. This particular thing should become 1, then only we'll exit. So this 0.46, 0.96, 0.65, all these trades have already exited. That is the reason why you are getting. And apart from this, we have the sector, that is the banking. We have the RSI. RSI should always be, we have certain condition here. I will show you that. The RSI, in case if the left script is in green, I'll come back to this again. I'll show you a real trade. So this is a particular trade which is currently running, Can Bank and SBI. Now Canara Bank we will have to buy, and S Bank also we will have to sell. Now we will not be able to short the cash market. So that is the reason why all your sell calls will be in one lot, and you should, let's say SBI one lot, what will it cost me? SBI one lot will cost me 27,490 rupees. Let's say 27,000 rupees. Now I will have to buy the same amount, almost the same amount what I have invested in SBI in Canara Bank also. So your total turnover on both the scripts should be almost equal. Now to do this, what I'll do, Canara Bank, my lot size is 1,000. So I'll not be able to buy one lot, because then in that case what will happen is my SBI will not be matching my Canara Bank's turnover. So what we do here is we will buy 994 scripts shares in the spot market. You don't have to be exactly the same, but in our calculations what we have done at the back end is we have tried to be almost equal in the price. That is, the investment in Can Bank should be equal to investment in SBI. So in this case, what will happen is 354.40. I'm taking it. I'm just showing you the current price, but actually, your call when it was generated, the price was different. So let me just go into the Can Bank, this particular trade. Now you see that the Z score is 2.3. This is the price at which SBI closed yesterday. You have something called trading now. Banking 39% to 2.08%. Once I click on this particular pair, I'll get the on-demand calculations. So this is the on-demand calculations. This is how it looks. So I have told you the highest winning trade and the highest losing trade will not be this actual figure, because there would have been a split. There would have been a split or a dividend issue. That is the reason why you'll not get that. And the other thing is the number of highest losing trades will actually be lesser than what is displayed here. Okay, that is because I will show you some real trades in that case. Now here you can see that the backtested data from 2004 to 2015, which is currently running. So this steep fall what you are seeing in SBI is because of the split. So you have the Can Bank and SBI backtested data here for 10 years. And these are the bars which will approximately tell you what will be your investment in that particular trade. So this trade what generated is around, total value is around 9,21,000. That is, you buy Can Bank and you short SBI. SBI one lot, Can Bank 994 shares in the spot market. So your total investment is around, your total turnover is around 9,21,000. Now let's say my banker, my broker, he gives me this particular trade at 7.5%, because I am carrying it over. That's an average 10%. So 9,20,000 I am getting at 10%. He is giving me 10 times exposure. That's what I mean. So my investment will be 92,000 rupees on this particular trade. Now, once I invest 92,000 rupees on this trade, so you are just seeing the Can Bank, SBI, Plus and minus is your Z score, that is correlation, this is profit, this is RSI, and we have volatility also. So from November 1st 2004 we have the data. Let me just come to the latest running call. So the latest running call is this in Can Bank and SBI. So this particular call got generated on May 15th. Canara Bank 360.85 was the price, and my SBI was an sell call, so you'll have to trade in a pair. So you'll buy Can Bank at this price and you will short one lot of SBI at this price at the current market price of futures. Now what happened? The Z score was perfect, that is more than 2.7. It started at 3.2. My correlation is excellent because we were looking at a correlation of more than 70%. And the first day trade is, that is zero, because that indicates your profit and loss. And your RSI is nothing but, you can see the notepad. RSI, whenever the left script, that is the left script here is, in this case is the Canara Bank, whenever the left script is in green, so Canara Bank is in green, your RSI should be around 30%. That is also perfect here in this case. So it is 30%. And your volatility should be around 2.5%. Now here in this case, it's not 2.5%, it's 1.9%. So there's a slight difference in that. Now the trade initiates, you trade, the first day it's a loss. Actually, whatever we bought has fallen down and whatever we short has gone up. So this is one condition. And the first day it was 11,000 loss, the second day it was again 11,000 loss, the third day it was around 19,000 loss, and the fourth day 14,000 loss, and yesterday it closed at minus rupees 47 rupees 41. That is, we are on a loss of 41 rupees on this particular trade. Now for this trade to close, we have certain conditions which are perfectly matching. So that is the reason why we have entered this particular trade. Now your Z score is 3.2. From 3.2 it has fallen down to 2.3. Now once this comes to 2 on Monday, this will turn into profit. And here the profit, what I mean by the profit is, we are looking at a profit of at least 20% on each trade. 20% in the sense, let's say in my case, I have in this case I have invested 90,000 rupees. So in case if I get a profit of 18,000 rupees, I will exit the trade. I will be very happy with that. So in this particular case, this has to turn into profit, which will happen in the next coming 3 or 4 days. So when this comes to 1, your trade will exit. So 2.3 should become 1. In that case, your trade will be in positive. That is, you'll be making profit, and it will be much more than what we are seeing here. So that is about the trading. Now we have in this particular pair, we have around 13 trades. That is Can Bank SBI. Number of trades are 13. The profit is 1,21,000. So profit per trade is, this is an average. There are some trades which would have given you more profit and less more profits. And winning trades. Now let me just show you this winning trades. 96, or roughly say around 77% is the winning trades here. And the highest winning trade is 48, highest losing trade is 57,000, which will not be actually this figure. I will show you why, because there has been a split. So I am just going back to the previous calls. So we had this call on June 9th, 2014, where we had Canara Bank short. Now the current running trade is Canara Bank buy and SBI short. Here in this case, it is Canara Bank short on June 9th and buy in SBI when the price was 2,700, that is before the split. So here in this case you can see the correlation started at 3.15, perfect correlation of 95%. So here, yeah, I'll just come back. So this is 3.15 is your z-score, which should have been actually 2.7 and above. 95% is a correlation, perfect, that is zero. And your left script when it is in red, your RSI should be 70%. In this case, it's perfect, 73%. Now what happens the next day? Next day, as usual, your CAN bank falls down and your SBI also falls down. So you make a profit of only 3,300 rupees. And the second day what happens? Your CAN bank actually falls much steeper and your SBI is almost going up when you compare to the price, previous day's price. So you have made your profit of 19,000 rupees. So 19,000 rupees, why? The reason why it is showing in a different background is it is giving an indication that your 20% return is already done. That is 1, 2. Second day, your 20% return is already done. So you can exit the trade. Now, in case if you don't exit the trade, you will want this figure to come down to 1. That is when you exit the trade. Now, it fell from 3.15 to 1.8. You can see that 1.42, your profit was 34,000. 1.3, it went to 35,000. 1.29, it went to 36,000 rupees. Now, on an intraday basis, this call would have closed on that particular day because we are looking at 1. This 0.29 would have changed to 1 on that particular day. We could have come out of the trade with 36,000 rupees profit. But that doesn't happen because we are looking at the end of the day calculations also. So at the end of the day, it doesn't go to, it again goes up to 1.29, 1.6, 1.4, and finally 1.1. Again, you have a chance here to exit because on an intraday basis, 1.1 and 1.14 is nothing but 0.1%. That would have happened. You should have exited at 37,000 rupees profit. It has come down to 0.9 on the end and the trade has closed. The trade has closed at 38,000 rupees profit. Now, how many days has it taken? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 14, 15. Let's say roughly around 15 days. So on an investment of, you can see the investment here. Again, roughly around 90,000 rupees investment, you have made a profit of 38,000 rupees. So what is your return on investment? So your return on investment is roughly around 40%. So 40% return in 15 days, that's a very good return. Now let me just show you some more calls on this particular pair. So this trade again closed at 24,000 rupees. I am slightly trying to rush because I like to show you some more trades which are already in progress and some trades which are closed recently and trades which are generated yesterday also. So here again in this case, you can see your investment is 80,000 rupees odd. So Can Bank was a sell, SBI was a buy here. The third day, it gave you that 20%. So roughly around 80,000 rupees here is your investment. You have made a profit of 20%. You exit the trade. 3.1 was your Z score. As soon as it came down to 2, your profit starts. So finally it ended at 24,000 rupees in profit. Now let's come to this particular trade. Okay, this is a loss trade. This is a loss trade. Here we have a Can Bank buy and here SBI short. 2.96 it started. 88% is the correlation. You can see there will be a problem with the volatility. So 2.56 is your volatility. That is also fine. So it started in negative profit. Then it went up to 3.87, 3.3. Finally, it closed at 59,000, 57,000 in loss. I think let me just check this trade. It's July. July. So this particular trade, we have something called in the settings. I will have to show you that. We have something called as the settings where we enter the prices and the z-score value you can give it here, the correlation and your amount. And the exit days, here I have placed it as 45 days. You can actually even do it at 30 days also. And the profit percentage here I have mentioned as 20%. You can even mention it as 10%. So in that case, what will happen is it will the trade when the z-score doesn't come to 1, it will keep on continuing till 45 days. That is the reason why you have got that kind of a loss. So I'm just adding the watch list. Yeah. So you can see that this particular trade started in July 25th and then it went on till September 27th. So you should not be staying on this particular these kind of trades for very long time. You should either choose your losses and come out because you have got a chance here. I think I'll show you this. 2.96 it started and it went up to 3.6. It usually should not go up. Then only you'll get losses. It fell down to 2.59. You have an exit here with 10,000 rupees loss. Or else we have another strategy wherein you can hedge this particular trade also. What you do is when you know that this particular 2.96 where it started, it is going beyond that. When it is moving upward, then you can hedge this particular in options. You can recover some of your losses in an option trade. I will give you an strategy again for that. For time being, because I like to get the option prices and show you how much you should buy or how much you should sell at what strike price with the NSE data. So that I'll do it in another session. But for this kind of trades, when your other scores are perfect, that is your Z score, your correlation, your RSI and volatility are perfect, and in case if the trade reverses and then moves against the required pattern, then you can hedge it also. You have an mechanism where you can cut down your losses when it moves up. Actually, here it has gone to 3.8, and again you can see that 3.8 here. So you can hedge it and then come out with minimum losses also. So that is a possibility is there. I will make a video of that. We'll have a webinar of that again some other time, in case if a particular trade goes against you. Now again we have this trade, can bank buy, SBI short. Again you can see the perfect conditions, 2.75, 90%, and then the next day it's 2000, 17,000, and then again it keeps falling down, and as soon as it reaches 1, it has given you this profit. So this is another trade. This was in 2012, can bank buy and SBI short. The next day itself it gave you around 15,000 rupees. Second day it gave you 19,000 rupees. Now one day, when if you just calculate 20% returns, that's fantastic returns. It's almost uh, BTST calls, buy now, sell tomorrow, that kind of a call, where you are making 20% returns. So if you can just see, finally the call ended at a profit of 22,700 rupees. This is a very small trade, short duration trade again. You can see that buy and sell here. 2.7 went up to 3.1 loss. You could have hedged it here again, and then it came back 2.86, and 21,000 rupees is your profit. This is a loss trade again. This ended at around 14,000 rupees profit again. So this is a wrong calculation. It's showing wrong. So finally, it ended at a profit of 34,000. You have a profit here. This is something which I wanted to show you. Now you have this particular call. Everything is perfect. It went from 2.7 to around 1.5. You have made 15,000 rupees profit. You are getting this profit. You could have exited here. Again, some amount of profits. And you can see that after that, it went into red. That is, it went into loss. So you have this chance. You have 20,000 loss here, and then you suddenly see 15,000 rupees and 12,000 rupees the next day. You could have exited. So we cannot consider this as a loss call, because you already have a chance to exit here. So that is the reason why I was saying that your number of winning trades might not be actually that less. It can be much more than that. That's the reason why I wanted to show you that kind of a call. So these are some of the calls in this particular pair. So this was in 2005. So that ended with around 22,000 rupees profit. So let me just come back and show you some calls which are currently in progress. So you know that Canback and SBI, your loss is 44 rupees right now, and your correlation is 2.3, which should come down to 1. Then we will close the trade. So we will check this trade again on Monday. We'll definitely be making profits there. Now let's come back to SBI and Yes Bank and HDFC. Now this particular pair has around 14 trades. Only 57% as your winning trades. You can see that the highest losing trade, what is mentioned, will not be the same as the highest winning trade also, because there might have been a split. You can see that here, or a dividend issue. So average around 1 lakh rupees, 90,000 to 1 lakh rupees. These are the trade. The currently running trade is this. So we had this buy call, this particular trade on May 5th, which got generated. Yes Bank we had to short, HDFC Bank we had to buy. Sorry, I didn't tell you how much to buy and how much to sell. So here Yes Bank you'll short one lot, and to make up that same total, what you'll do is HDFC Bank you'll buy one lot, you'll have a shortfall of some amount. So what you'll do is you'll buy the remaining in the spot market. So you buy one lot of HDFC Bank plus 184 shares in the cash market. Then your turnover on HDFC Bank and Yes Bank will be equal. Then only you enter the trade. So that is how it happens. So these calculations will automatically come to you. You don't have to sit and calculate how much to buy and how much to sell. So this particular call generated on May 5th, the only concern is number of winning trades. Winning trades are less than 70%. We are always looking at winning trades of more than 70%. So this is an risky trade. So risky trade in case if you're one advantage what you have is you know that Yes Bank and HDFC Bank are both private banks, and you know what is the trend in these two particular banks. So you can take a risk and then you can enter, or you can just ignore the trade. So here it's 57%, I want 70%, that is not there. But in case if you have entered, the first day is 6,000, second day is 14,000, third day it's around 10,000. So you had some good profits, and currently now it is at 10,000 rupees profit. Your Z score is 1.4 now, which has to come down to 1, and your trade will close in profits. So that is about Yes Bank and HDFC Bank, the currently running trade. So whatever currently running trades will be in green and red, and the trades which have completed will be in this one, maroon color, and watching now will be playing white backgrounds, and the trade which has generated now, that is yesterday, will be in this fashion with a background of purple color. That is Voltas short Havels buy. So you will short one lot of Voltas and you'll buy one lot of Havels plus 140 scripts in the cash market. So let me just come back to this. Can Bank, ICICI Bank, these are the current running trades. So you can see that it's slightly better here. The percentage of winning trades of 64%. So the Can Bank was buy again. Can Bank buy and ICICI was sell. So 89%, we were looking at 70%. That's perfect correlation. 30% is the RSI what we are looking at. That is also okay. And 2.5 was the volatility. It's 2.7. That doesn't matter. So next day was around 30,000 rupees profit, and the next it gave around 17,000. So 3.3. Once it comes down to 2, always book all your profits. 2 or again to 1, you can have that chance. So the second day it's around 17, third day it's this particular call would have closed on this day on an intraday basis, because 1.13 is, I mean, it would have changed, the prices would have changed in such a fashion. This could have come down to even less than 1 also. That is why you are seeing this kind of a profit of 32,500 rupees. So what is your investment here? Roughly around 1 lakh. So what is your return? 32,000 or 32% return. That's a very good trade. You could have exited here, but otherwise we again have made that 20% yesterday. It closed at 17,000 rupees profit. So HCL Tech and TCS, this is a very old call where we had an split in HCL Tech. That is the reason why it's showing. We'll have to remove this. And this Mindtree and Infosys is the current running call. Mindtree short, Infosys it's in a buy. So this is one very good example. So here you can see that 25% is the winning trades, but your correlation is perfect, 81%, and your Z score is 2.76. That is where it started. The second day, the first day loss, second day loss, third day profit, fourth day again profit, and again yesterday it closed at minus 5,000. But this is still 2.55. Now this has to come down to 1. So we can still wait on this particular trade. But otherwise, this has already given you profits. You can see that. We don't have much data for this. That is a problem for Mindtree. So this is a pair. Wipro and Mindtree, yes, this is again. So you can see that Mindtree is weak against most of the IT pack. So this is the trade that is currently running in Wipro and Mindtree. May 15th it generated. Wipro was a buy, Mindtree was a short. 2.85 is the Z score. 79% is the correlation. It gave you the 20% what you are looking at. So 1 lakh around, let's say, is your investment. 20% return is what? 20% in the sense I am calculating 7.5% as my span margin. So that is the reason why I'll get it at I'll get this figure 17,000. I make a profit of 20%. I could have exited here, but though this call is in 2.64 now, this is in a loss of minus 3,000. So this is one example what I am giving you. 50% winning trades, risky, but in case if you have entered, there is a 50-50 chance. 12 trades, 6 trades would have been loss, 6 trades would have been in profit, but it's not necessary that 6 trades would have been in losses. It could have closed like this also. It would have given you profit, but it would have closed as a loss. That the system will calculate it as a loss only, not as a human being thinks. So this is the current running trade, Wipro and Mindtree. I wanted to show you one particular trade, Andhra Bank, Can Bank. So this is a very new trade. So you can just see that Andhra Bank and Can Bank, we got this call generated on May 20th. 21st it was 10,000 rupees profit, and 22nd we had that 15,000 rupees profit. That was yesterday, it closed at 15,000 rupees profit. Here, the reason why I wanted to show you this, your percentage of winning trades is 80% here, and the other conditions are also perfect. So that is the reason why you have got this kind of profits within 2 days. Now I will show you certain conditions how in script a particular pair will behave. So this is an perfect trade. Here, what we do is we have one particular script what we have bought that actually moves up. Whatever we have bought will move up, and whatever we have short will come down. So these two are your profits. This is one particular condition. It's a perfect Z-score, a perfect correlation, perfect, I mean 100% winning trades, and perfect RSI also. So when this happens, your profit will be very fast and your trade will close very in a very short duration. Now there are other conditions also. Now the script what we have bought doesn't move up in the fashion what we expected, but the script what we had short, it rapidly falls down. So this is also a very good trade. Though this buy call hasn't given us much profit, but when you, let's say Tata Steel, I'll give you an example. Tata Steel has, let's say it has the current results or whatever is happening, it has not performed that well, so it's not moving up. But Jindal Steel is worse than Tata Steel's performance, and it falls down 10%, let's say. So in that case also you make profit. And there is another condition, like let's say Jindal's Tata Steel, you are not expecting that kind of a result. It has done really well. It went beyond the expectations, but Jindal Steel also did it did not do well when it is compared to Tata Steel. I'm just giving an example. It doesn't mean that Tata Steel is doing good or Jindal Steel is doing bad. I'm just giving an example. So it is not doing as good as Tata Steel. Otherwise, these two things would have been in the same line. So that is one condition. And these are the other conditions. Whatever I have bought, this is the zero line. Whatever both Jindal Steel and Tata Steel are both are doing very badly. But compared to Tata Steel, Jindal Steel has done worstly. So it comes down. So these are certain conditions under which you'll definitely make profits. Now that is Andhra Bank and Can Bank. So your Z score 1.37 should come down to 1. It will happen in another 2 or 3 days and your trade will close on this. So I will show you one trade. This is Voltas and Havels. This is a call that is generated yesterday. So let's click on that. So you can see the split here in Voltas and a split in Havels. But otherwise both are moving in a similar fashion. So this is the call. You can take up this call. So Voltas you will have to short, Havels you will have to buy. There are 16 trades in this past 10 years. 75% is your winning trades, but the problem with this particular trade is its correlation is only 50%, around 49%. So it's a 50-50 chance that this trade will make profit or it can go under loss also. Now, since you know the conditions, it's always the reason why we said we just go back to our advantages. You know what is your risk. So since you know what is your risk, then only you can enter the trade. Otherwise, nobody is forcing you to enter into a trade. You know what is the risk involved, then you enter the trade. So that is one of the biggest advantage with paid trading application. So this is a call that got generated newly. And I would like to show you some trades which have 100% winning percentages. Just give me a moment. So I just told you I have certain trades which have 100% winning percentages. In that, I have Wipro and Infi. So Wipro and Infi, I have 100% winning trades. So 100% winning trades in the sense I have never lost a trade here, though I have very less data here, only 4 calls. I can show you this. So this is a recent trade what we had. So Wipro was in buy and Infosys was in short. I think this particular trade, this not the perfect trade. I am showing you the reason why I have put this. The highest and the lowest winning trades might not be exactly the same amount because it might have been because of a split or dividend. You can see that there is a split here in Infosys, 4,300 rupees. It came to 2,000 rupees. That's because of that particular script. You're just seeing this kind of profits, which usually doesn't happen. Usually it doesn't happen, but there are some cases where your trade has actually doubled also. So this is because of the split. So you got this highest winning trades, which is wrong. So this is another trade. Wipro short, Infosys buy. The second day itself, first day itself, it's 15,000, and then it gave you profits, some losses, and finally it ended at a profit. So I'll give you another trade. Cipla and Sun Pharma. This is an 100% winning trade. So you can see there are 20 trades in this particular pair. Cipla and Sun Pharma, all 100% winning trades. There's no losing trade at all. The recent one was in April, that is last month. So this is how the trade happened. Cipla was a buy, Sun Pharma was a short. So 3 is your Z score. It fell to 2 here, 14,000 rupees profit. And then again it went up. Finally it closed at 30,000 rupees profit. So if you just check this particular pair, you will be having all 100% profits. So 30,000 rupees was the profit on this particular trade. See, the idea is not to stay too long into the trade. When you are getting 20% within a span of 2 days, you should be very happy and then you should come out. So if you are trying to stay too long, there are chances that it will reverse and then you'll be getting into losses also. So always try to get whatever is your target, that is 20% or 10%, whatever you fix, and then come out of that trade, and then look for another trade. Don't keep your margin in a single trade. Always keep moving from one to other, one to other. You'll definitely make profits. So this is another trade. Cipla buy and Sun Pharma short. You can see that finally it ended at 23,000 rupees profit. So this is another profit consistently from day one started giving you profit. Finally ended at 38,000 rupees. So the recent 100% winning trade what I had posted was IDBA and Federal Bank. I will show you that. This trade happened last month. That's again a 100% winning trade. So it started with IDBI short and Federal Bank buy 3,800, and then it went into losses. 41,000 rupees loss here, 33,000 rupees loss here, 25,000 loss here, and then 10, and then it started, and just within the span of 3 days, it made its target of 20%. So we have 100% winning trades here also. So you can just see this. So 29,000. 27,000. Like this, we have certain trades which are anything which is more than 70% winning trades. With this correlation, you can happily take these trades, and then you can try to book profits. Now, I think I have shown you a few calls. Maybe we can check all the other calls also. I think there is one call which have no. This is one particular call which is giving you consistent profits, but it has not got exited till now. That's still currently running. We have 50% winning trades here, only 10 trades. In the 10 trades, let's see how many actually are the winning trades and how many are lost trades. So you can see that this call got triggered on May 4th. The second day itself, it gave you 19. The third day, it gave you 24,000. You could have exited here. You could have put your money in another trade. But otherwise, if you just see, it even gave you 44,000 rupees. And yesterday, it closed at 35,000 rupees profit. So this is what I call as a perfect trade. Perfect trade in the sense I just showed you in the first image. Whatever you bought has gone up, whatever you short has come down. This is a perfect trade. You have short IFCI here, you have bought this one. In the second day itself, though it has not gone up to that kind of an extent, it has definitely given you very good profit. 2 days, 46,000. I'm sorry, that particular slide is not this one, this one. Whatever you bought has not gone up to that extent, but what you have short has really fallen down. So this is another trade which ended in profit. Let's see some trade which has gone into loss. So this is one trade which has gone into loss. But in case if you just go back and see, we had IFCI buy, we had SR Transfin short. It gave you profit here 16,000, 17,000. The expected profit of 20%. It has already given you within a span of 4 or 5 days. It gave you even 30,000, 24,000, and then it went into under losses. So that is the reason why I usually tell that don't stay in a particular trade for too long time. Book your profit and come out of it. So you can see the loss here, 1,50,000. It already gave you a profit, but this call ended in a loss. But we cannot consider this as a loss because it is very clearly defined. What is your goal is to take 20% profit and come out. We should have done that. Otherwise, that 50% actually out of this 10 trades, 6 trades are in profit only. I'll show you. Let's see some more trades in this. So this is an profit loss trade. That's also again a loss trade. This is a profit trade. Okay, it actually closed in loss. sorry, in profit only. Whereas you can see that it already gave you profits within 7 days. This is again a loss call. The reason is, one is your this should be 70% and above. Your volatility here is 7%, which we should not definitely have. Volatility should be around 2.5% only always. So this is almost what do you say? Three, 4 times than the volatility. Then you should not be entering this trade. The same should be the case here, around 4.7%, which we should not have at all. Roughly around 2.5, 2.6 or 2.7, that is a figure, not more than at least 3. So that is one of the reason why you'll see lost trades. So this is another trade. So 93,000 rupees profit. Again, your volatility. These are all risky trades. It depends on whether you want to pick it or not, because your volatility is very high here. Again, 5%. It can go anyway. I mean, whenever it is a risky trade, it can either give you a profit or it can give you a loss also. In this case, it has given you a profit, that to 93,000 rupees. This was in October 2007. So for 80,000 rupees investment, you have got a profit of 93,000 rupees. That is double your investment. So this is, it's possible. I told you earlier also. Doubling your profit on a single trade is also possible in this, and losing your entire capital also is possible in this, provided you do not pick those kind of trades. So you know that clearly that this should be 2.5 and around that. It's double that, more than double that. So you should not have got into this trade, though it has given you profit. So these are some of the trades that we have. And again, you can see this particular pair has a tendency of going overboard on volatility. You can again see that here 2.9, the first day itself it gave you so 93 became 89, 15 became 16. I told you this is the perfect trade. So this is the kind of trade what we have there. But your volatility is again a problem there, 4%. But when you have got this 50,000 the next day, what is your investment here? If this call was in 2005, so 70,000 rupees, you have made another 70,000 rupees. That is double your profit. So these are some of the trades that we have, and I can show you many more trades, but it will take huge amount of time to come and check all these trades. Now, in case if you have any doubts, can you please type it in the chat box? Now, this comes. This is not EOD data. This gives you real-time data, but the data will be refreshed every 1 hour. It's not like tick by tick or 1 minute data. Every 1 hour, the data refreshes. The reason why we have 1 hour data refreshes, when you check the number of symbols that we have, around 500 symbols, and 10 years of data, it takes huge amount of time to do the calculations. So the reason that is one of the reason why we have 1 hour refresh. But whatever 1 hour refresh comes, it will be the latest prices. And the other thing is, since you will be trading at the end of the day, that is before the close of the day only, you will place your orders. It's not like whenever you get a call, you'll always should wait till 3 o'clock, and in case if the call still exists, then only, yeah, that's what I'm trying to tell you. You don't every 1 hour if we get a call, like what happened in this case, this Andhra Bank and SBI, yesterday I had a call. in the afternoon. But Andhra Bank, SBI was at 298, sorry, 280, 290 plus or something, 289, I think, sorry. It was around 289. But when the day closed, it fell down to 281. So the call actually disappeared. That's why it is showing like this. So at the end of the day, the call was not existing. Your Z score, which was there at 2.7 in the afternoon, came down to 1.63. So we will not be entering this trade because the trade itself is not existing at the close. So we ignore that trade. Like this, I had Andhra Bank and SBI, and I had another pair with Andhra Bank. Andhra Bank was a short, SBI was a buy here. I had another pair which completely disappeared. But this particular one trade, that is Voltas and Havels, stayed. So we entered this particular trade at 3 o'clock because the trade was existing till that time. So that is how we do the trade. But whenever you're booking profit on an intraday basis, once your Z score comes to 1, you should exit. So entry is one thing which you should do at the end of the day. Exit is something which you should do as soon as your 1 comes at any point of the time on that day. So this is another call, Syndicate Bank and Can Bank. So this is under, we got this on 18th May, that is on around 12,000 rupees profit till yesterday. I didn't get you, yeah, Mr. Pradeep. Yeah, you can do that. See, that is just a matter of ascending and descending. You'll have to just click on this particular, this one. So it will give you the highest Z score and the lowest Z score minus plus, it will give you both. See, and the other thing what you should be actually looking at is this particular Z score is a dynamic figure. It keeps changing every day. So you won't need this. Even the correlation also you won't need this because your correlation might start at 93. Let me show you Andhra Bank and Karnataka Bank. So this is a fresh trade, Andhra Bank and Karnataka Bank. Andhra Bank buy, Karnataka Bank you short. So you have 15 trades. In that 67% rates of profit trades. The highest losing trade and 1,70,000 is again, which I don't think is possible because at any point of time there would have been a split of the problem. Maybe this is the call what we have. No. No, this particular strategy will not have a stop loss at all. How will you place the stop loss? The strategy itself is very clear. You can enter the trade only when your parameters are reached. In case if you feel that I am not getting this 67%, I want more than 70%, you will not enter the trade at all. So there cannot be a question of stop loss. This particular, because you can't have a stop loss. How can you have a stop loss? So in case if you place a stop loss for both, you'll end up losing the trade itself. The idea is you're hedging one with the other. So in case if you're making a loss in one, the other will act as a hedge and then reduce your losses. So that is your stop loss actually. The other script acts as your stop loss. So any other questions? And please you can ask me now. Another 15 minutes. I think I've taken quite some time, 1.5 hours. If you have any other doubts, you can just get it clarified. Now, the reason why I showed the that particular figure of 19,000 rupees, I think you would have understood this. A trade, I can show you at least 10 trades which have given you more than 19,000 rupees. The current running trades also. Let me show you UCO Bank and Allahabad Bank. So you're just paying us for one trade, and the rest of it you'll be having it for yourself. So UCO Bank and Allahabad Bank, you can see that we have this trade. The next day it gave 12,000 rupees. We still have this trade is still continuing. This 2.1 should come down to, you have seen 20,000 rupees, 30,000 rupees loss also. But yesterday it came down to 839. Finally, once it comes down to 1, you will have definitely profits. So, any doubts, please? If you want to talk, I will give you access. You can even verbally ask me. So I'm just leaving it here. In case if you have any doubts, you can just ping me. You can just type it in the chat box. See, pair trading is a different concept altogether. I'll come to the Z-score. First, let me answer you this. We have three different applications. That is the Neutree. What we see here is the pair trading system. What you're seeing, that is a pair trading. What the current session what we have is for pair trading. Apart from this, we have futures trade. That is your technical, your charts and sorry, you have the Excel, Microsoft Excel application. Hello. That we have as an intraday basis. This is a completely different application. Clicking on this currently data button. And the third application what we have is the charting software. So we have three different softwares, three different ways you can trade. So pair trading is carryover trades, usually not intraday. You should carry over, then only you'll be able to make profits. And coming to your question, Z-score more than 3.5, shall we continue the trade? Usually, I will show you that particular strategy some other time. In case if a particular script starts at, I will give you a live example. I think Motherson Sumi and MRF, we have this particular call. You see this particular trade actually it started at 3 and then it fell down to 2 and then it gave you profits also. There are some trades. I'm looking for one more trade. In case if your trade starts at 2.7 and then it moves up to 3.5, then you should not exit the trade. You should rather hedge that particular trade. I will show you that. I will explain you that strategy. It involves buying some options, buying or selling some options, so that you can hedge your particular trade and minimize your losses. Maybe not make good profits, at least minimize your losses. That there is a strategy for that. We can even do that. But you should continue with the trade. 3.5, in case if it goes up, it cannot go up to 5, 10 or thing like that. It has to come down to 1. At any point of time, it has to come down to 1. So that is the strategy. So in case if you take some trades where you are seeing the correlation is 41% here, Motherson Sumi and Exide. So you should not be entering this trade at all. Though you see again the volatility is around 4%. Your correlation, the basic idea of having the correlations here more than 70% is already defeated here. It's 40%. You should not be entering the trade. So in case if you enter the trade, then definitely you'll make loss. It's not, you'll definitely make loss. It is a possibility that you'll make a loss, but there is a possibility that it will give you enormous amount of profit also. So it's a bit difficult to explain that. One thing we know that the terms and the conditions are this. So only once we have this, then we enter the trade. In case if we take a risk and enter, then it is up to the trader. You should be ready for even a loss also. I think so. We'll be adding many more scripts, whichever will be included in the F&O segment. So this is one particular call. It really gave me jitters. Hexaware and Wipro. I will show you this call. This happened sometime last month. So someone, I think the question what you asked, that is in case if it goes beyond 3.5% Z score, what should I do? See, this particular, I did not get what is this AVG? AVG in the sense, can you just expand that? This particular trade, 292 Hexaware short and Wipro 649 buy, perfect trade. You can see it here, 2.7, more than 70%. The next day it went up to 4.49, 45,000 rupees loss. And then it was around 3 and odd. We have seen loss of around 70,000 also. There's nothing wrong with the trade. 1 lakh rupees loss also. And eventually it came down to zero point 0.8. Finally, we got out with a loss of 25,000 rupees. Winning trades is also perfect, 70% and above. Now in this case, what do we do is, as soon as you have entered at 2.72, the next day it went up to 4.4. You use another hedging strategy in options. You could have come out of this trade with even lesser losses than this 25,000 rupees. I'll show you that strategy some other time. So that is how it can happen. So I think I have clearly answered that in real time. I saw this particular trade. You can check the volatility is also no. It was okay. 2.53. That's okay. The next day it was 4, 3.99. There was a fundamental news actually. To be frank, the reason why we had that kind of losses, there was a dividend being announced in Hexaware. We knew that Hexaware peaked at around 330, but then too we stayed on that particular trade. We knew that this trade will come down. Hexaware will come down because we had bought Hexaware. We short Hexaware here. It went up actually around 330 to 330, and then it fell down, and now it is somewhere around 279. And you can even get Wipro Mindtree. Let me just show you this call. This is an very recent call. Recently we had a call in Wipro and Mindtree, and within a span of a few days again we got back this call. You can see that we had a call on April 8th last month. Everything was perfect. 83%, 2.7. It gave you 31,000 rupees profit also within a span of 5 days. It's not necessary that once we get a call, we'll get a call after another 1 year or 6 months or something like that. So last month, 16th, the call closed, and again we have this call back. The second day itself, it gave you this 20%, Wipro and Mindtree. And Wipro is, sorry, Mindtree is a short. You can always, see in case if you're trading the, let's say, positional, this is a wonderful software which can give you, uh, you should not be using it this way, but it will give you an idea of where the scripts are moving. Let's say Mindtree is short here. You can see Andhra Bank is buy against most of the scripts. There we had one buy. Canara Bank is a buy. You can see it here. Can Bank buy here, Can Bank buy here, Can buy here. Against SBI, against ICICI, against Andhra Bank. So you don't compare TradingTree with this because TradingTree it's again different application. You use trade there on specific stock and you do it on specific time intervals, that is intraday or positional. Here that is not the case. Here we are using a hedging strategy where we trade in pairs. So both are different strategies. You should not get confused with both. No, you should not. You should never do this. See, the strategy is defined for each and every application. So you'll have to follow the strategy and don't go against it. The day when you go against it, you'll definitely make loss. So any other doubts? TradingTree, you can definitely use a strategy where you'll be able to make 10,000 rupees per day. I'm just posting those videos every day. See, MCX pairing, the problem is we don't have the data. We are yet to get the data. Otherwise, we can do MCX also. We'll get very good results in MCX. So we don't have the data. We have the data only for the past 3 years. So we'll have to get the back data for another 10 years. Then you can even do MCX also. Not even say Z score once it is 2.7, it will automatically generate a call for you. More than 2.7, it will definitely generate a call. So you don't have to average anything out here. So once the call is triggered, you check the correlation, volatility, RSI, percentage of winning trades, and then enter into the trade. If you feel that okay, one of these conditions don't match, don't enter the trade at all. You have another 500 trades to come. So why do you worry? Choose the best trade and enter, make profit and come out of it. You have so many groups and so many scripts. You don't need to enter into speculation again. So this is how you add the trades. Just choose all of them and click on backtest. Sorry, I did not understand you. What do you mean by fancy stocks? See, the idea of having a group itself is, see, correlation is something important. Correlation, I told you, the reason why we have a correlation is because there should be two scripts which are in a particular trade, which is similar in business. Now, I can't put Mindtree in Sun TV because Mindtree is into IT and Sun TV is into entertainment. So for Sun TV, I can add ZTV or I can add Dish TV. I have that there, but not in IT. Likewise, Century Textiles doesn't come to me in IT or entertainment. It will actually be in your. I'll show you. It will be in textiles. So you have Century, AB Nuvo, and Arvind. We have this three companies into the same segment, same trade, same kind of a business. So we add this in a particular group. You can do that. I mean, we have defined a strategy. We have defined the groups. Now, let's say it is possible also. Uh, Let me give you an example. Cement. Like cement, I have ACC, Ambuja, Grasim, India, Ultratech cement. Now I can add DLF also in this because without cement there is no DLF. So they will have to keep constructing. I can add DLF here, but the correlation will not be your 70%. So your trades will be number of trades will be more, but your correlation for a particular trade will be less. So instead of having that DLF here, I rather have DLF in my real estate. Same thing, I can have this real estate, all these scripts in housing finance also. So all these guys depend on housing finance companies or even the clients also. So I can add that there also. But what I've tried to do here is I have segregated them into certain groups so that you will get better calls. That is a motive here. I think you got me. So I think I've answered quite some questions. In case if you have any more doubts, what you can do is you can call me on this number, or else you can just even mail me also. That's the mail IDs. And I have already told you the price. So this price what I am mentioning, it's nothing but a single trade for me. So single trade for me, but you can use it for 1 year. And I've already showed you that some of these trades which will be executed on Monday. So you can watch for Voltas and Havels and Andhra Bank and SBI. Sorry, Andhra Bank and Can Bank, I think. So Andhra Bank and Karnataka Bank is will have the call on Monday. And other than that, we have Voltas and Havels, which will be seeing the profits and losses on Monday. So thanks for coming. So in case if you have any doubts, you can follow that number and the mobile number and the mail ID. So that's a session on paid trading. So I have recorded this video in case if you have joined us late, you can check the video once it is posted on YouTube. Thank you. Bye.